Hello, Lakshman. How are you?
Hi.
Hi, how
Good
are you doing?
good morning, Dale. Can you hear me
Good
okay?
morning. Good morning. Yeah, good to see you.
Yeah, nice to see you too. Oh, there we
So,
go.
yeah, a lot happens between our conversations, 3, 4 months, and in this business, we're always assessing and reassessing and looking at what data might be telling us. So,
Oh my God.
we've gone to a no landing, no recession consensus out there, Lakshman. I have a feeling that you don't see it that way. And could it be that even though rates are going up on inflation news, um, that the market is leading the Fed? Because I know Powell wants to cut.
Yeah. He he made that he's been making that clear since maybe December.
Yeah,
He really wants to cut, and even in the face of uh kind of contrary information, markets roaring and things like that, he's like, yeah, I still need to cut just at the
he's
earlier
probably
couple
reading your
meetings.
research.
Well,
What's he
yeah, I
seeing that
don't.
he?
No,
What's he?
no. I wish. I mean, I kind of wish to tell you. Yeah, you caught me off guard there. So I'm going to say I wish he was, because I think there's some pretty spectacular missed opportunities in navigating the inflation cycle, which
Okay.
is one of his main things that he has to do. Or he and the Fed really has to figure that out. And it's a complicated place there. It's a bit of a mess. And I know you guys are very practical. You want
Yeah.
to see kind of how do you navigate this? We're not going to change them, but we may have a sense for the lay of the land in front of us and how we can kind of guess how they might react to it. So on in let me back up. Okay, so you have the economy, the indicators cycling down. I'm talking about growth.
Okay.
And um, we have a tight labor market. We've talked about that in past interviews. We've talked about, to a degree, the huge amount of stimulus that came on top of that tight labor market. So the combination was pretty intense. And even though we had a couple of quarters of negative GDP back in 2022, we didn't have negative jobs growth. Labor
Yeah.
market was tight, and trillions and trillions of excess stimulus was hitting the economy.
I heard the
So,
Fed wants to de-emphasize one of their mandates, the employment mandate, because now they're saying it's because of immigration, and
yeah,
that's going to keep the market strong, and they don't want to be forced to tighten off strong employment data.
I think to your point, right? They may have a bias of tightening or not tightening, as the case may be, and sometimes it's being more dovish as the bias. And
Yeah.
then you say what you need to say in
Okay.
order to justify that. You can find a reason, So I
Yeah.
think that that's part of what happens here, but just in the really big backdrop, because I want to talk about where are we in the cycle right now.
Okay.
But in that really big backdrop, you have this kind of recessionary impulse down. You have a tight labor market because of earlier immigration issues and then COVID pulling people out. And then you dump trillions of dollars of excess stimulus on top, and yeah, things are tight. And you don't have a recession in the sense where to have a recession, you have to have output contract. That happened, but you didn't have jobs contract. We think we know why. I mean, these are pretty straightforward things I'm saying here. Labor market tight plus trillions of dollars. So it's hard for jobs to go negative. Okay. So we're still, I was talking with a client the other day and they're like, hey, are we done with this? Is that stuff out of the data yet? And while much of it is, it's not all out. We've still got uh, some, I'd say, like PTSD on the tight labor market, especially for some of the smaller businesses where they're very reticent to let people go because they had such a tough time
Right.
hiring. They had anyone with a pulse they had to hire earlier, and so they're very careful about that. And there's still some stimulus getting pushed out. I mean, you couldn't shove it
From the
all out.
infrastructure bill,
Yeah, so there's stuff
they're
trickling,
pouring
still trickling
concrete
out.
now.
It's
Yeah.
on different budgets everywhere, and you know, you got to
Yeah.
use it before the end of the year, kind of thing. That whole thing
Oh,
is that whole ship has sailed and it's happening.
yeah.
Okay.
Yeah.
So all of that adds up to what we've described as a tug of war. We have this cyclical move down. We've talked about it with our labor stuff earlier, where all the levers that they can pull, they're pulling all the variable levers they can pull short of firing people. They're pulling, which is showing the cyclical impulse down really hard on the economy. But all that excess stimulus is keeping things elevated, and in particular on non-discretionary spending. So really big picture, education and health. That stuff's running, you know, around 4% growth rates. And you can toss government in there too. So those kinds of jobs, which are tons of jobs, last year we're running at 4%. This year they're still pretty high up there. And so even though all that discretionary cyclical stuff is coming down, that's offsetting it. It adds up to slowing jobs growth, but it's coming down year over year, and no recession. So tug of war continues. That's the backdrop on which we're going to switch cycles from the U.S. economy. I want to talk about two other cycles. One is global industrial growth. It doesn't have a lot to do necessarily with U.S. economy. It's global. It's bigger than the U.S.
Right.
It's just really the industrial sector. It got creamed, right? It was in this post-COVID world, so much stuff has been off the charts, but all that global industrial stuff got really smacked to the downside really hard, and what was notable for an extended period of time. And part of the mechanisms in cycles, and again, I'm not a model builder, we're looking at patterns, the ebb and flow, and cyclical indicators. So part of the mechanism that creates a turn to the upside is a long time out in the desert, right? And so you do have this kind of squeezing and drying out, and that's what cycles do, is they reset for the next leg up. And that happened globally. Remember at the beginning of
Okay.
2023, everybody jumped the gun and said, "Oh, we're having a global industrial upturn. China's reopening. We're good to go. Let's go long oil."
Yeah.
And it was
People, yeah.
it was the
People
wrong
got the
trade.
reopening wrong. Definitely.
It was all wrong. And I think people are probably a little burned on that. So they're like, "Oh, I don't know if I believe it this time." But actually, global industrial growth is turning now. And while China is a mess, um, the goods and export sector is gearing. So that's not going to solve China's problems, but for about 20% of the share of the Chinese GDP, it's gearing. It's engaged in that global industrial upturn, as are industrial sectors in Europe, where things are pretty bleak at the moment, and even in
I
the
heard energy
US.
demand was really high in places like Italy, which, you don't need a lot of energy unless there's something going on economically,
Yeah, and so
right?
exactly. So very short, like the near term, our longer leading indicators turned up, and you guys can
Can I
see some.
pose can I pose a
Yeah,
hypothesis to you,
yeah,
Lakshman,
yeah,
that a recession in the real economy is triggered by some type of financial event or crisis that dilutes confidence in the economy. And what I'm talking about in particular are the regional banks. And, I just want to show you the regionals because we all know the market went parabolic, right? It went
Mm-hmm.
parabolic.
Mm-hmm.
And all that really generated for something KRE, and that's why the Russell really hasn't gone. Plus, the Fed just closed the rescue facilities
Mm-hmm.
that they had. And look at this on a weekly.
Yeah, I'm trying to
All
get
right,
my
I'm
screen so I
just
can see
saying.
you. There it
So
is.
yields
There
are
you are.
heading up. Yeah, yields are heading up again. So this is really it. So
Yeah,
we had
they're
a
going to get
pair.
smushed because, well, this is the higher for longer. So, right. So that's
Yeah.
going to mush these
So that,
guys.
yeah, isn't it going to, you know, just, no
So
rescue facilities again? Could it be just confidence in the banks?
look, here's how in all my years of research, and there's a few, and building on my mentor and my mentor's mentor, right? So how do you get a recession? I think you're onto it. I want to restate what you said. Okay. It's cyclical vulnerability combined with a shock. Now,
Yeah,
shocks are actually happening all the time, and it's
yeah,
kind of like which is the one that is a trigger. And when you're vulnerable, a negative shock is a really big deal. And when you're in a cyclical upswing, you can take a negative shock and not have a recession. Okay. So
so
go
uh,
back to the
uh
tug of war. I'm talking about you
okay.
got a cyclical impulse down, offset by excess, a lot of trillions of dollars pushing the other way. Okay. So the tug of war is going on. In fact, what's happening is you've got this window of vulnerability that's opening, and then the excess fiscal stimulus is pushing it closed, and then it's opening and closing. That's what's going on right now. If the shock hits when that's open, you get a recession. And the shock could be a financial shock. But there are times when you've had nasty financial shocks without recession, like, for example, 1987. It's a big financial shock. The recession didn't happen there. In fact, people thought, oh, we're good to go. It's years later, no problem. And then in 1990, there was a recession. The shock in that instance, in 1990, 91, was Saddam Hussein invading Kuwait.
I
And there was a
remember it.
spike. It's really the rate of change. It's not the level of energy prices. It's the pace that they're changing if it happens really fast. And so
Well, there's
that,
another candidate,
yep,
Lakshman. Is it, now I have WTI up there. So, we start closing over $90. The war in the Middle East expands. The Strait of Hormuz is blocked this
there's a
summer.
ton of supply. Look, there's a whole show on the supply problems. And let's agree. There's the supply doesn't look great. On the global industrial upturn, okay, which I was just talking about, and this is on. You can go to our website. We have this thing called the column, and there are uh, articles about this on there that you could take a look at. And so the global industrial upturn is real. That's happening. And if you think that through, one of the things that happens when global industrial growth moves to the upside is that short leading indicators like the uh, PMIs and the commodity, if you go to Resource Center, and the industrial commodity price inflation, those things are very short. They're leading indicators, and they're going to move with the direction of global industrial growth, and they're moving to the upside. So you have a combination of a cyclical upturn globally in industrial growth and all of the litany of supply things that you just talked about.
Yeah.
Okay, so we know that's part of the landscape of 2024. Now let's look at inflation. When you look at inflation, if you go to the column all these things are there at that the bottom left. It says the column there, and if you go to
Good stuff.
inflation, which is a separate cycle, the fundamental misread of the Fed and many, I would say, it's not a knock on people. It's just that they just don't know this really well. Is that underneath the column, there's some inflation stories.
Yeah.
Is that inflation, like growth, it's different than growth. They have different cycles, but inflation, like growth, is cyclical. So now, if you accept that, and I'm happy to take questions on this, but I accept that, and I've been looking at inflation for a long time, and we've done a lot of work on this since 40-something years, and
I used to see you on the Financial News Network, Lakshman.
now compare that. My God, we were looking at some archives. I found some.
Remember
I found
that?
some interviews. I found some interviews with me debating Peter Thiel from
Okay.
like the early 90s. It was pretty
Yeah.
hilarious, and Kudlow, and it was these are funny. But I'm telling him, I was saying the same thing then I'm saying now, which is, hey, look at global sensitive industrial materials prices. Those are linked to global industrial growth. But on inflation, it's cyclical. And if you compare that to the narrative, which is the Fed narrative or the Wall Street narrative, which is inflation is cycling down and it will go toward the target and stay there. So on the face of it, I would say, that's not, I hear your story, but that's not how anything has happened that I could observe in the rear view mirror. I'm not even forecasting. I've just never seen inflation do that.
I called that a Wizard of Oz forecast.
Yeah, it is what you need it to be, right?
Yeah.
So here we are. That's the presumption. So I'm like, yeah, that's a pretty shaky presumption. Let me look at the forward-looking data on inflation. And if you let me share the screen, I could
Oh,
show a
sure.
couple. I'll show a couple of those real quick. And what you see is that the forward-looking indicators of inflation correctly anticipated the downturn, and then they have gone sideways. Let me
Okay.
just
So
hit
you
my
clicked
share
share
here.
screen. Yeah.
Yeah, sorry,
It's all right.
I need a producer.
Early.
You're slick. You got producers and all this stuff going on. Let me get in here. And real quick, there's your
Okay.
jobs growth at 4% for non-discretionary.
Yeah.
Yeah, non-discretionary. And here's your discretionary jobs growth just collapsing, right? That's that real tug of war I was talking about. Here's the strength of the global industrial upturn. That's a leading indicator, long leading indicator,
Yeah.
short leading indicator. Here's actual industrial production diffusion index. It's bottoming and starting to
Yeah.
move to the upside. That's not over. That's going to keep going. So then this is international inflation. Bang. You got to be looking to the upside. So whatever happened with PPP or whatever the ECB is saying right now, the lay of the land is going to be to the upside on inflation as the year progresses. This is a
So,
leading indicator. This is a leading
okay.
indicator also. They tend to focus on this, which is the rear view mirror coming down. So
We declared victory over inflation a few times in the 70s and it came back. It was
yeah,
like three
exactly.
cycles, right?
This is, I mean, this doesn't have the latest data point, which is a little up. The gray line is the current environment. The black line is the 70s. I'm not saying it's going to be this magnitude, but the point is inflation is cyclical, and it's remained cyclical since the 70s, all through now. It still cycles up and down. And so the Fed is kind of betting that this gray line goes down to 2% down here,
Yeah.
and stays there. And I'm like, yeah, I don't, maybe, but I don't see that in the patterns in the past. And when I look forward at forward looking data, this peaks before this. These are our leading indicators globally. And they peak before actual inflation peaks here.
Okay.
And now they trough. This one goes first, this one goes second. And these indicators have edged up from there. Okay. This is still up there. That's a diffusion index. It's not magnitude, it's diffusion, directional. So it's hanging out up here. This one's starting to move up this way. And this, I bet you this thing is bottoming right now. Okay. And so the ECB probably has to run out in front of it and say, hey, we're good, everything's good, mission accomplished. And then in retrospect later, they'll see that it's turning up. That's
so based on your stuff, Lakshman, is it a possibility there are no Fed rate cuts this year?
Look, anything's possible. I think that by hook or by crook, they want to cut. So they may look, the Fed is fully capable of making mistakes, right?
Yeah.
Our
Well,
presumption.
what's a motivation for them to want to cut if the numbers aren't doing it, and now they're going to de-emphasize employment?
All the powers that
is it
be want cuts. I
okay?
mean, you could, public and private sector powers that be want cuts. Everybody likes easy money.
Okay.
So, there's a lot of pressure, right? I mean,
Could it be Paul's fear of a Trump presidency, Lakshman?
could be all, I think everything's in the mix. I
Okay.
think you want to say, I promised cuts. For whatever reason, he really wanted to promise cuts earlier. And you always want to say, I've accomplished my mission.
Well, he's used to not saying that. Maybe not used to it, right?
Yeah, but look, I just want to, I like the Wizard of Oz, right? Pull back the veil. This is an inflation cycle upturn in the forward-looking data. Look at that thing. It's huge.
Yeah.
It's off the
Yeah.
charts. You'd have to be blind to miss the upturn. The Fed was calling all of this transitory.
Yeah. Right.
All right.
Yeah.
Okay. So here we have the downturn in the FIG. It's interrupted right there. That's war in Ukraine here.
Right.
And the way I'm just asserting, but the way a lot of people think, including big institutions like the Fed or whatever, there's just a lot of inertia in betting that this line keeps going down. The problem is it's cyclical. It's a cyclical line. So if we know this, we could say, well, when is it going to turn? And that's what the leading indicator is designed to do. So it turned down. It's correct. Inflation turned down. Okay, good. But to
The top
my eye, and
index,
I've been doing this real time since 1990.
the top
That's a long
index has
time.
given up very little. It's corrected
And
more in time
to
than in
my
price.
eye, this is your tell. When this thing goes
Yeah.
sideways like that,
Yeah.
I gotta say, whoa, 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 something is up. And
Yeah.
more recently, like I think we got an update last Friday. This is moving now up here. It's about, if you see my pointer, it's about up here now.
Yeah, I do.
And the
Okay.
thing is that in this century, in this new century, all this sci-fi stuff and AI stuff, in this new world that we live in this century, since the beginning of the century, inflation cycles globally have been pretty synchronized. So
Okay.
in this 11 country future inflation gauge, it includes the United States. The United States is holding this line down with this input. This is one of the 11 future inflation
Okay.
gauges in the previous chart. I was just telling you this one's starting to move up here. So my basic sense is the tug of war in growth continues. The leading indicators on growth have firmed a bit. That is true. So I don't think the tug of war game is over, but right now, we can make up stories around why it's election year, whatever, but the leading indicators are firming on growth to the upside. When I look at global industrial growth, boom, that's a clear, solid one on
Okay.
demand to the upside in global industrial growth. So the manufacturing sectors of whatever market you're looking at, US, Europe, Japan, even China, they're all going to gear a little bit here.
Okay. So
Now, the net
we're gonna have good growth, clear sailing for the next 6 months at least.
for industrial sector, okay? I'm not
All right.
saying that the um high end discretionary services are going to go crazy. I'm not sure about that. Okay. Rates do sometimes matter. It's like how long can you get credit for? I don't know. The CRE stuff is at risk, but on the other side, the government spending and infrastructure spending is continues apace. So I think in navigating 2024, which has that huge political thing on top of it, you've got the tug of war in the US right now, leading indicators of growth are firming a bit. Globally, a separate cycle, they're clearly to the upside, which is supportive from the demand side on industrial commodity prices and activity. And then you've got a global inflation cycle upturn, of which I'm really concerned about the US. I know inflation in the US is cyclical. I know the narrative is it's going to go down towards 2 and hang out there. And there'll be all kinds of stories about, hey, it was used cars or it was something else that goofed it up. But when you look at, we don't do additive inflation like that. We're not adding up models. So we're not coming at it that way. We're looking at the drivers of inflation. And the drivers of inflation is that top line. They came down, they've gone sideways over a year, and now they look to be edging to the upside. I think that's your big risk.
Okay. So that's
Or at
an
least,
avoid bonds
yeah, it's like you want to be in stuff that does well in an inflating environment.
like
And
miners.
if you want to tie that to some economic activity, I'd lean on the industrial sector.
Okay.
Does that make sense?
Yeah, it does actually.
Okay.
The leadership in the market's going to change, and
Is
I
that
think
that's
it's
what
going to,
it
yeah, yeah, and that's what your work is confirming.
that's what the
That,
work is confirming. I don't know, like look, currencies are really messy, but they feel like they're gonna get lively
yeah,
because you have central bank narratives, and let's say basically they all want to cut, right?
yeah,
Maybe the Japanese they're like, yay, we did one hike and then we're good because they've got to finance all their debt. Uh, but let's say inflation just keeps not cooperating
right,
with that story. Now, all those central banks, they have different reaction functions. They got slightly different constituencies they're dealing with.
right.
But it feels like that's a place for some action.
Okay, yeah. So dollar
So you guys are
volatility.
all trading, so I'm like, it
Well,
feels like
does this keep?
it's going to be a bouncy environment,
Okay,
right?
bouncy. So, is this the dollar in a tug of war with euro, with what's happening and what you're seeing? Tug of war, or
I don't
do
know
you
if
give the dollar?
that's almost too fair because you're saying it's balanced. I don't think it's that balanced.
Okay, so the
I think
dollar has
they're
the edge.
yeah, on that one, you probably got to as much as I mean the deficit numbers are mind-boggling in the US, but it's still the big dog.
Yeah. U.S. exceptionalism, I hear all the time.
It's still the big dog. We'll see what the bond market, if the bond market vigilantes come out of hibernation. We'll see.
Well, they
Let's see what
certainly
happens.
have in the
So
last
look,
few weeks.
Dale, bottom line, you got to watch the future inflation gauge. That's the thing, right? If that thing is just like kind of gently bouncing around and not really taking off,
Yeah.
all right, we can keep this party going.
Okay.
If that thing moves, and it can move, you saw the charts. And if you look in the column on businesscycle.com, go to resources and go to quote unquote the column.
So that's a
Then,
shock then, Lakshman.
yeah,
An
that's a
inflation
shock. That's
shock.
yeah. And so how are we going to tell the story, right? The Fed's going to have to come up with some line. The bulls will have to come up with a line, right? I think it really trips up the real estate side because the plan has been to hope for the rate cut.
Yeah.
Now,
Right.
okay, so we went from 6 or 7 to 3 or 4 to 2 or 3, and maybe they'll sneak out one, but I don't know if that's enough to hold that story together.
Yeah.
That's a question, right? So
yeah.
I'm all there's plenty of fragility out there right now. Bottom line, U.S. leading indicators of growth, they're firming a little bit. So tug of war continues, but for the moment, they're kind of trying to close that window of vulnerability. Global industrial growth to the upside, demand on commodities.
Yeah,
So,
copper's been flying. It hasn't just been precious metals. It's
and
been
then,
copper.
well, so look around at it's other industrial stuff, building stuff,
Yeah.
packaging stuff, all that's even. I mean,
Stuff.
one of the things that's in our commodity index is what the heck is it? Tallow, right? So that makes soap that goes into factory cleaning.
Yeah.
So that's how granular we can get, and you see they all move as a group.
Yeah.
And you can't trade that, I'm afraid. It's hard to trade that. But
no, you just have to pay
but
30% more for
so
everything.
So be leaning on the side of things inflating, be leaning on the side of industrial activity to the upside. Tug of war continues, and look, I'm with you. You got to watch out for what could break.
Okay. Yeah, definitely. And really great to talk to you again, Lakshman.
As always.
We've been doing this a few years. I want to thank you for coming in with your giving spirit to edify our community.
Hey, I like
Really
your.
appreciate it.
I mean, look, I appreciate you keeping the group together. And I feel like I'm getting to know everybody, and uh take a moment to get outside. It's spring. I got to do
Yeah.
that too,
Yeah.
if you can. And I'll
Yeah.
see you.
Smell the roses.
You get together with Melinda, and we'll schedule something, a check-in over the summer, and see if the future
Okay.
inflation gauge moved up.
Thank you, my friend, for being here. Appreciate your view. Takeaway: inflation, tug of war.
You got it.
And Lakshman, and look him up on X at Business Cycle, and go to his website I was showing earlier in the day, and great content.
Dale, the other thing that we've done, go to our LinkedIn Economic Cycle Research Institute, because what we do there, they have a pretty good setup, and somehow they push out without being obnoxious. We have some setting where you could just get a newsletter, and it's like, hey, here's what happened with whatever global growth, inflation, but it's not like in your face and annoying.
Yeah.
It's once a month or
Yeah,
not even that.
Yeah.
Okay.
So check them out on LinkedIn too. My comment on LinkedIn about today was I always enjoy having a conversation with my friend Lakshman. And I did again.
And Dale, all questions are always welcome. So let me know what you want. I'm here for those.
So there you go. And that he's making himself an information asset to you guys. Check him out and say hello. Thank you, Lakshman.
Thank you.
I'll see you in July.
Take care.
All right, buddy. Bye. So that's a wrap, everyone. Hope you enjoyed it. I always enjoy talking to Lakshman. You could join the team in 9 minutes. So you only have 9 minutes to get ready for the morning edge. So go shave. Good luck today. Don't just count your pips, count your blessings. Adios. You're welcome, everyone.
Hey traders, this is Blake Morrow with Forex Analytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.